Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. What I want to talk about today is the issue of equity offerings that MLPs make from time to time, and they've made quite a few of them actually over the past several months. One reason, of course, is that prices have risen quite a bit for our favorite MLPs. If you want to look at my article that's on the site right now, most recent article, it concerns those MLPs. It actually has a fairly large table showing the various offerings from our holdings that have occurred this year so far. You know, one thing that stands out from that table is the initial negative reaction to those offerings. Investors pretty much you know, and if you look at that, they pretty much assume that it's dilution is the primary outcome of issuing more equity. Not a lot of people are looking at this and saying, well, they're raising money cheaply, and they have a very strong track record of deploying this money to generate higher cash flow and higher distributions. People aren't really taking that point of view. They're taking the point of view of, you know, show me, you got to show me what these profits are, and because I can't trust these investments to pay off, I'm selling. So that, you know, as a result, pretty much every time we've seen these equity offerings, you know, these share prices come down. Energy Transfer Partners, one of the most recent ones, but certainly not the only one, you know, victimized by again, selling in the wake of equity issues. But if you look at another column in the table there, you'll see which shows the return 6 months out. And of course, some of the equity offerings this year haven't had 6 months out to show performance for. So we've just shown where they've gone since the offering. But if you look at that column, you'll see a very, very different picture. Very, very strong returns. In fact, in some cases, extremely strong returns that have occurred after the equity offering. And again, this is pretty classic. What it's showing you is that negative investor reaction right up front where they demand to be shown, but then these MLPs, again, time and again, showing that this new investment, that this money that they've raised is going into productive enterprises. It's going into things that, in other words, increase cash flow, increase their distributions. We have quite a strong history of distribution growth in these things. Enterprise Products Partners, for example, 24 consecutive quarters of dividend increases. That's 6 years, and it runs us back, you know, of course, through 2008, 2009, and well before that. So, again, this is a great model, and it continues to work through some of the most turbulent conditions in the last 80 years. That's enough proof for me to recommend to all of you that when you see an equity offering and you see the stock or the MLP, the favorite MLP coming off in its wake, whether we put a flash alert out there or not, I mean, this is a time to buy if you're looking to buy these things. If they're below the target prices. A lot of people say, well, your recommendations are above the target prices. Why can't I just buy above those target prices? The reason is that in this kind of market where everything gets sold off pretty much whenever there's any hint of any sort of trouble, or I wouldn't even call a share issue a hint of trouble. In fact, it's a company showing it can raise capital cheaply that it can later invest. But be that as it may, all sorts of stimuli for declining share values in the near term. That's an opportunity to pick these things up. So if you're patient, chances are, you know, Enterprise or Kinder Morgan or even Spectra Energy Partners, which has been well above our buy target for some time, chances are at some point they're going to issue equity because they are doing so well in the share market, and they can issue it so cheaply. And when they do, the price is going to come down, and you're going to get a good opportunity to buy. So again, this is the kind of way that we're playing offense in this market. A lot of people are very concerned with defense, and they're putting in stop losses. We strongly advise against doing that, particularly in MLPs. I think it's pretty much guaranteed that you're going to get dumped out at a terrible price at some juncture. Rather, you know, set a buy order for something that you want to own at a good price. It can be our target price. It could be well below our target price. And as we've seen this year, these things get exercised from time to time in this kind of market where so many people are fearful, so many people are playing defense, and that makes it, again, a great time to play a little offense and lock in some really outstanding returns in some of the strongest companies I've ever seen. Thanks for tuning in. Look forward to chatting with you next time.